So one thing that I've noticed lately is that a lot of you traders still find it really difficult when it comes to identifying supply and demand levels in the market. And trust me, not being able to identify the right supply and demand level is really risky because you might end up taking the wrong trades that will end up not yielding profit. And this is one reason why a lot of people still find it so difficult to trade the most simplest trading strategy, which is known as supply and demand. That's why in today's video, I want to take you through a step-by-step guide on every single thing you need to put in place, every single thing you need to know in order to pick the right supply and demand levels in the market. So with that already said, let's get started with today's video. So now here's a typical trade that I took here on supply and demand using simple supply and demand strategy. And if you look at this trade carefully, it went straight to profit. However, there was a little bit pushback and in trying to fluctuate around my entry point. However, at the end of the day, we still had a solid 1:4.2, which is really huge. Imagine risking $100 for $420 or more. That's a decent risk to reward ratio, and only supply and demand gives you these levels. The only way you get them is simply identifying the right supply and demand levels, and that's what I'm going to share with you right now. So now when it comes to identifying your supply and demand levels, there are some few rules that you need to put in place in order to help you actually get them correctly. So what I'm going to do here is that I'm going to give you the rules. After that, we are going to implement the rules and do some little back testing to show you that what these are the exact things you need to put in place in order to actually make supply and demand work for you. So now the first thing is that, so rule number one is simply, let me get my test too. Rule number one simply power move. So now what I mean by power move when identifying supply and demand is that only look for supply and demand levels within areas whereby the market made decisive moves. So what I mean by decisive move is that here's a typical example of what I mean by decisive move. You see over here, so I identified this place on the 15-minute time frame. So let me go over to the 15-minute time frame. So now take a look at this area here where I identified my supply level. If you look at it carefully, you see that what after the market printed this, so let me get my drawing too. You can see after the market printed the bullish candle in between these two bearish candles, you can see the heavy fall that the market created. You can see the market had a fall. Let me get my drawing too. So now here's what I mean by power moves. So now take a look at this point here. You can see after the market printed this bullish candle, tiny bullish candle here, you can see that what it was followed up by an aggressive sell-off from the area. Now this is what we mean by power move. When looking for supply and demand levels, you should be looking for supply and demand levels in areas like this whereby the market did not last too long. Immediately the market came, give you some confirmation, and then instantly pumped off it. And this should be the areas whereby you should be looking for supply and demand if you are really willing to make money from trading supply and demand. Don't go and take supply and demand trade in some random places whereby you see that the market find it difficult to move, which means that what both buyers and sellers were highly competitive at that area before the market was able to move. So these sort of areas are things you need to avoid when identifying supply and demand. So the rule number one here is simply look for power moves. And here's a typical power move here. After the bullish, so if you're identifying an area of supply, what I simply mean by power move, that if you identify an area of supply, after the bullish candle that is printed, at least you should be able to get two bearish candles in a row being uninterrupted without any bullish sentiment. Two bearish candles in a row showing that what the market sold off immediately. And if you're identifying a demand level, you should get, after the bearish candle, you should get two strong bullish candles in a row. So in this case, we had what 1, 2, 3, 4, 5. We had 5 bearish candles in a row, and this one shows that what that area was a high area of value that a lot of people are looking forward to sell off their positions. And now that is the rule number one when it comes to identifying your quality supply and demand levels. Now rule number two is simple. BOS. So the rule number 2 is simply change of character or BOS. So let me use the term I normally use in my videos, which is MS. So now the rule number 2 when identifying supply and demand is simply make sure that the point whereby you are identifying your supply and demand actually lead to either a break of structure or a market shift. So what I mean by market shift is that if the market was a downtrend, at that point whereby you identify your supply and demand, it should be an area whereby the market switch from a downtrend into an uptrend, or from an uptrend into a downtrend. And another thing you should look at for, in case it's not an area of market shift or a change of character, it should be break of structure. And what I mean by break of structure is simply if the market was trending downwards, the point whereby you identified your supply level should be a place whereby the trend continued. So for example, let's take a look at what I have here. So now I'm just going to refresh it. And now let's take a closer look at it. If you look at this market right now, you can see that this market was trending downwards. So from the whole of this area here, you can see clearly that the market was clearly trending downwards. So now since it was trending downwards, I need to make sure that my area of supply should be very close to the area that lead to a break of structure. And for example, here is where we had the break of structure here. This is what we mean by a break of structure, which is what the market continuing its downwards movement. And here was the area. So since we had this break of structure here, it simply means that the supply I have around this area is very strong. And now since this supply is strong, I'm more confident that whenever the market comes in here, I'm going to get a good entry opportunity. Why? Because number one, this area had a break of structure to show that the market is continuing its downtrend. And then number two, the area had a power move, which simply means that it had all the two criteria actually needed to identify a good supply and demand level. And now after having these two rules, now here is the next rule that you need to put in mind as well. Now make sure that that particular candle that you are marking as your supply or demand candle is not bigger than the following candles. So now let me show you a typical example of what I actually mean by that. So what I mean by the candles not overtaking directional candles is, here is it. Let me delete this off. So let me cut it up to here. Now assuming you were identifying an area of demand, and then you see this candle here, you get a candle, like you can see the bearish candle here is way bigger than the bullish candle, which is the red candle is bigger than the green candle. So in this scenario, this sort of area is not a good area for you to identify an area of supply and demand. So if you identify an area of supply and demand, make sure that if the market is now bearish, make sure that the bullish candle that you are marking as your area of supply is not bigger than the bearish candle that came after it. And if you are identifying an area of demand as well, make sure that the bearish candle is not bigger than the bullish candle that came immediately after it. In a situation whereby you have these two candles to be equal, then you wait for the next candle to be printed in order to make your decision. So for example, let me show you a typical area that is qualified to be a good area of supply here. So now take a look at here. Over here is a good area of supply. You can see this is an area of supply. Why? Because this bearish candle here, you can see the candle body is way tinier than the bearish candle that came after it. This will make this area a good area of supply. So whenever the market comes over here, you could be looking for a good selling opportunity. And now let's take a look at other places again. Over here, this is a bad area to look for. So now let me zoom in into the place. So now this area here is a bad area to look for an area of supply. Why? Because this bullish candle here is way bigger than the bearish candle that came immediately after it. So with this in mind, whenever the market comes to this sort of area, you should not be looking for a selling opportunity. Only look for a selling opportunity where the opposition candle is way more bigger than the one that made the zone look juicy to you, that you are actually marking. And I hope you understand this perfectly. So now let's take a look at some demand levels here actually. Okay, take a look at this point here. This point here is a good area to identify an area of demand. Why? Because the this bearish candle is smaller than the bullish candle that came immediately after it. And apart from that, we also had what we call a break of structure at this point. This also made this area a good area as well. So we had a break of structure at this point, and then we had this bearish candle being smaller. So looking at this area here is a perfect area of demand. So you can look at this area and say this is a perfect area of demand that the market is likely to buy from. So now let's see what the market does when it get there. When the market came here, the market failed. Well, this is because it doesn't always end up winning. There are times whereby you win, and then there are times whereby you will fail. So if you watch my previous video on my perfect setup on supply and demand, you will know exactly what to look at for that in order for you to prevent these areas that actually end up disappointing you. So you can go check out that video, will be tagged in this video description as well. Because even after identifying the most correct area, there are some that will not actually end up well, and all those are part of trading. So now let's take a look at this one that I actually took over here. Let me show you the difference between this one and the other zones. So now coming over to the 50-minute time frame. Now take a look at the one that played out for me. You can see that the bullish candle here, which is this bullish candle here, is way smaller than the bearish candle that came immediately after it. So this one made it a good area of supply for me. Immediately I sighted that candle and this power move, I knew that that was a good area of supply for me to actually take a trade from. And lo and behold, when the market came in there, I actually took the trade and then ended up smashing my take profits few hours on. So let me just play it for you to see. So immediately it got in there, gave me the bearish close. I took my trade immediately. So for this particular video, I'm not here to show you how you can take your trades and all of that. I'm just here to actually show you how you can identify these areas easily. So now, with so much talk, let's actually put what you've said into practice. So now let's do a quick back testing on it and see how we actually go about this particular strategy. So I'm going to give you a hint of the strategy that I trade using supply and demand so that you can also implement it at your own end as well. So now let me take a quick walkthrough and then show you how it looks like and everything you need to know about it. So now I trade mainly supply and demand, as I've shown in a lot of my videos. I'm just a supply and demand trader, nothing complicated. So the first thing I do is I'll come over to the daily time frame. So on the daily time frame, we can see clearly that the market is a downtrend. However, over here the market looks like it's trying to trend back to the upside, but then we can observe clearly that we are having this strong high over here and also this other strong area here that is preventing the market from actually becoming an uptrend. So with the market still trading below these two areas, we can be well sure of looking for an opportunity to still short the market, provided that the market hasn't broken above them. So once I know this on the daily time frame, I know that I can look for either buy or sell depending on where the market is. But from the position where the market is right now, there's no way I'm going to take a buy order until the market break above this top. So for that, I'll be looking for supply areas. So now let's take a look at this market. So whilst looking for supply areas, there's nothing bad if you also identify your areas of demand as well in case the market decides to change direction. So here we have an area of demand. You can see the red candle is shorter than the green one, and then also this green one had a power move that led to a break of structure or a change of character, probably over here. Yes, a change of character that changed a downtrend into an uptrend for us. So we'll have that over there, and then let's look around if we can spot any other area. Okay, this area here, but this area doesn't really look promising that much because there was no much movement from here before the market started slowing down. So for that reason, I'm going to remove this area. So now I'll just go over to the 1 hour time frame, because my main areas that I trade, I often look at them on the 1 hour time frame. So now let's take a look at the 1 hour time frame if you are going to spot any area of value that we can look into. Looking at this area here, the only area of value I have here will be this point here. This point looks really good, so I'm going to extend it to cover this week over here. So in case I'm to set my stop loss should be covering every single week we have over here. So remember, I'm looking at this green candle here, not the green candle over here. I'm looking at this middle one here. So here we have a supply as well. And you can see over here the market looks like it was coming into it, but the market did not get into it still. So now if this market can get into it, we could be looking for a good selling opportunity if we get a bearish close on the 15-minute time frame. So now let's see what the market does from here. So along here, you see we have this area here. We can be looking to buy from here as well. We have this good area of supply at this point that we can be looking forward to buy from on the 1 hour time frame. Let's see this area. This area, it has already been mitigated, so I'm going to delete it off. So now let's see what the market does from here. Okay, so we got this sharp push into it and then quickly push back down again. So from here, I'm going to when we had a push into it. So let me just cut it backward a little bit. Yep. So where we got a bearish close. So this becomes our entry points. Let me just get it off here. So originally this would be the entry point. Immediately I get this bearish close over here. Let me just go back. So when I'm trading supply and demand, once I get my tap into my supply or demand area, the next thing I do is that I go down to the 15-minute time frame. Yes, immediately the market tap into it like this, I come over to the 15-minute time frame, as I said in my other video. Once the 15-minute candle closes in the direction I'm going to trade, I just take the trade immediately. Like for example, immediately I get this 15-minute candle closes like this, I won't take this one. The reason why I will not take this one at this point is simply because this one is still above the 50% mark within the rectangle that I've drawn here. So I'll still wait for it. Okay, this third one is the one I'm actually going to trade because this third one is now below this 50% mark. So that is the one I'll comfortably trade. So when I'm trading supply and demand, that's one thing I always do. I don't take trade inside the box. I only take my trade outside the box. So if the market break above it with the force of a news, I patiently wait for the market to come back into it and they give me a good reason to take it. After that, I aim for a minimum of 1:2. So if my trade is not giving me 1:2, then I'm not taking that trade at all. So I could be looking forward to get that at this point. And then once the market get to this point here, I'll just extend over to this point, and then I'll actually close some profit off in case of any problem. So now from here, now let's see what happens from here, what to get from here. Okay, so I'll just come over to the 4-hour time frame to fasten it up. Let's see if our stop loss get heated first. Okay, our 1:2 was tapped in safely. Our first 1:2 was tapped in safely. So we are now hoping if the market still comes back down. Let's see if it happens. Okay, we got it fully, you see. And then we also caught a similar trade like this weekend. Let me just open it up on my Notion. So last Friday we also had this sort of similar trade that I dropped in my Telegram channel. So if you are not part of my Telegram channel, you can actually join it. So okay, here's my backtesting data, not here. Trade record. So let me come over to trade record. And then here's that particular trade here. So this is my new trade record. You can see the trade was taken on August 1st, but was completed a day the following day. So let me just zoom it in. So you can see the full setup here. Here's identify a daily market shift to the upside. I saw a buy shift to the upside, and then a slower downtrend. So you can see here I had my demand level right after an internal market shift. So as I did, so you can see here was the demand level. You can see, and then I had a break of structure right in front of it. So you can see we caught a very solid 1:5 move on Euro USD just the past Friday before I'm uploading this video to you to see on Monday. So you can also join my Telegram channel. The link will be down in this video description as well. So I only use simple and straightforward trade management technique. My first aim is 1:2. Once I get a 1:2, I will advise everybody to take 50% off or even more, depending on whatever thing they want to take, and then let the rest run. So no matter how far it goes, we've already taken 50% off, so we are no longer going to have any losses recorded. So once we get a 1:2, automatically we close 50% of our position and then let the rest run. If it continues, we'll get more profit. If it doesn't, we let it go like that. That's simply how I do it over here, but not in every single trade. I only do it for trade that are giving me, that have shown good result, that they are going to give me good results. So now you can see here we had a quick walkthrough. So now let's see if we get another one more again for this backtesting process. Let me clean this one off. Let's see if we get another area here. Let me just clear everything, remove drawings. Looking at here on the 1 hour time frame, no any good area here. However, we'll have this point here. So how the market react from this point to determine if we are going to take the position or not. So let's see how it reacts when the market gets to that point. So you can see this one, it broke out of it immediately, boof. So with this one that the market broke out of it with this full force, even if it comes back into it, I'm not taking it. So for this particular market here, there's no way I'm taking this market again, because the force at which the market broke above it was too strong for me to take any trade within that area again. But in general, you get the concept of actually picking the right supply and demand area. It's simply following the rules that I've given to you. Rule number 1, make sure there's a powerful move from the area. Rule number 2, make sure that there's a break of structure or a change of character after the demand or supply was created. Rule number 3, make sure that that place has not been used before. Make sure that it's unmitigated. No any other touch has been on it before. So in case you want to trade supply and demand and actually get to know every single thing, you can see here is my backtesting result of this supply and demand techniques that I'm trading. You can see I had way more wins than losses. You can see every single thing over here. So in case you want to learn this simple strategy, you can simply join our live streams. You can join our live streams every day, or also check on my YouTube channel, which is the channel you are watching this video right now. You can see here is a video. You can come watch this particular video here known as perfect setup. You can come watch the perfect liquidity supply and demand setup. This one will actually put you through every single thing you need to know in trading supply and demand really well to get your channel. In trading supply and demand to make you profitable. I break down every single thing you need to know about supply and demand trading in this particular video. So that strategy is what I've been backtesting over here. And you can also join my Telegram community where I drop trading signals once in a while and also drop some trading advice as well. So with this already said, this is simply every single thing you need to know about trading your supply and demand, marking your supply and demand zone. Just implement the rules that I've given to you. As usual, I'll go through the rules again. So here are the things you need to note, which are the most important thing in this video. Number 1, make sure there's a power movement from where you're identifying your supply or demand level. Number 2, make sure that there was a break of structure or a change of character from that area. Number 3, make sure that if it's a demand level, make sure that the bearish candle is not bigger than the bullish candle that came immediately after it. And if it's a supply area, make sure that the bullish candle is not bigger than the bearish candle that came immediately after it. Put these rules in your mind whenever you are trading supply and demand, and you are going to get a decent result, just as I've gotten from my backtesting results here. And you can still keep backtesting and then getting more results. You can see I'm backtesting GBP USD, AUD USD, ZOR USD, and then GBP AUD. So with this already said, have a nice day. Join my Telegram channel for trading signals. Bye.